Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts Emily Parker, CoinDesk's Executive Director of Global Content, and the Thai Director of Content, Lawrence Lewitton. Good morning to both of you.
Good morning.
All right, before we get into it, let's take a look at what's going on in the markets, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 30,431, still holding above that 30K mark and not moving much, but we're seeing some green this morning. Let's see if Ether is following suit. The CoinDesk Ether price ETX index is at 1,870, looking very similar to Bitcoin this morning. And DeFi assets, the DFX CoinDesk's DeFi index is at 113, up about 0.8%. All right, let's story. Circle CEO Jeremy Allaire said in a recent interview with the South China Morning Post that Beijing should consider allowing for a Chinese yuan-backed stablecoin if it wants to internationalize its currency. Emily, you spend a lot of time in Asia covering the Asian markets. Tell us what you make of these comments.
Well, I think Beijing will probably do what it wants. I don't think it's particularly interested in what Jeremy Allaire is suggesting, whatever those intentions are. But yeah, I mean, it's a reasonable point. Obviously, Circle has been very outspoken about their preference for stable coins over central bank digital currencies for obvious reasons. So clearly, there's a little bit of a motivation behind a comment like that. But again, I think Beijing is going to follow its own trajectory, regardless of what various crypto founders,
Yeah, I mean, can you blame him though? He's the CEO. He's got to get out there. He's got to market his product. Lawrence, what do you think?
Yeah, it's literally what he's got a job to do. I mean, I'm going to tell everybody that they need to buy data for crypto because that's my job. You're a bus driver. You should buy data.
All right, let's leave it there. I'm sure we'll follow the Circle story more closely as time progresses. But let's go off to Hong Kong now. Hong Kong is continuing to draw on crypto enthusiasts by embracing Web3 and creating regulatory frameworks maybe a little bit faster than the rest of the world. The government's positive attitude towards crypto has attracted several firms and leaders in the area, including our next guest. Joining us now is TRON founder and Huobi global advisor Justin Sun. Welcome to the show, Justin.
Hello, everyone.
Justin, always a pleasure to have you on the show. The last time you were here, we were talking about Huobi Global's license in Hong Kong. Any progress there?
Yes. So everyone start to operate exchange in Hong Kong. So I think Huobi Hong Kong will be live in July 15. So we have been prepared this for quite a long time. And so far, I think we started to have more details about what kind of the token we can list it, how we can do KYC, AML, and what's the banking requirement for open bank accounts in Hong Kong.
So what are those tokens that you can list? Can you tell us?
Yes, sure. So right now, I think we received guidance. Basically, it's more about how many of the index include those tokens. I think we have a list around 20 of them. And also be aware, even without index reference, if you have a big trading volume, they still have a grace period. You can apply those tokens if you want to list them, but not a lot. I think basically right now we want to get a grace period for several tokens, especially for stablecoin, because this is very important for operate crypto exchange. So we apply for USDT, USDC, TUSD, and also basically the major top 20 tokens in CoinMarketCap.
Hi, Justin. Always nice to see you. All right, let's talk about some of the details here because I don't think that many people understand the process of getting an exchange licensed in Hong Kong. And my understanding is that it's actually quite hard. And so I was wondering if you could talk about just some of like the challenges or some of the things that you have to do. For example, I heard that for Hong Kong exchanges, you're not allowed to use third-party custody. I don't know if that's correct or not, but I heard that there's some rules that are very specific to Hong Kong. So if you could just talk about some of those challenges, that would be helpful. Also, are you guys going to be available for retail trade in Hong Kong?
Yes, we are going to be available for retail trade. I think it depends on who is the investor or owner of the exchange, right? I think for example, you never operate like an exchange before. I believe Hong Kong license has very high requirements. Exactly, because they require you to operate exchange on your own, but the custody can't leave Hong Kong, so it's all gonna be all the cold storage, all the crypto assets needs to stay in Hong Kong, and you need to have like a very robust, basically hot wallet and cold wallet security solution. And also, they require to have many market surveillance tools, which prevents market manipulation, and also it requires you to open like bank accounts in the major Hong Kong banks. I think we have do a little bit math about operate exchange in Hong Kong. If you never operate exchange before, I think at least you need to spend around 100 million Hong Kong dollars, which are around like 15 million US dollars every year to operate exchange. But for example, like Huobi, we already have those systems. So it's gonna be like, I believe like 20% or 30% of the cost we estimated.
Thank you for that description. So let's just talk about Huobi for a second. So as we all know, Huobi was one of the biggest exchanges in mainland China. That's what Huobi was, right? It was a mainland Chinese, really popular exchange, right? Obviously, it doesn't have that market anymore the way that it once did. So I guess the question is like, can Huobi ever return to its former glory, right? Like, how are you going to kind of get Huobi back to that kind of status? Because now there's a lot of other exchanges. You know, that was really like Huobi's special thing, right? I'm not saying it can't have another special thing, but that was its special thing. So what's the plan here? Like, how do you kind of resurrect Huobi?
Yes. First of all, I believe we need to focus on Asia markets. Of course, I think Huobi has the best reputation among all the Asia traders. And also, right, so recently we have seen more and more traders started to get excited about crypto because of Hong Kong new crypto regulation. So that's why I think this is a big opportunity for Huobi to dive into Hong Kong markets, since this is most of the institution and the major investor. Be aware, like all the major Chinese companies listed in Hong Kong and trade their stocks in Hong Kong. So actually, Hong Kong has the similar size of the markets compared to mainland China in terms of stock trading. So that's why I believe crypto trading in Hong Kong will also share the similar ratio, I think, eventually. So that's why I think we focus lots of our energy in Hong Kong and in the Asian markets.
So, we have to address the elephant in the room, and that is Binance, the largest exchange in the world, possibly based in Asia. We don't really know. No one really knows anymore. So, first of all, have they been invited, or do you know of any moves on their part to try and find a home in Hong Kong? And second of all, obviously, they've had some major C-suite departures as of late because of several different regulatory jurisdictions coming down on them. What do you make of this? Is there an exodus out of Binance? Is Binance in trouble?
Yes. So first of all, I believe Binance focus is more on the global markets. So right now we still didn't see Binance apply for Hong Kong local website operation. But I believe eventually I believe eventually Binance will apply for that. But Binance has a very big market shares. So that's why I think Binance might need to get approval from the Hong Kong government if they want to apply for a license. Because of course, Binance entering like any new markets or jurisdictions will be very big locally, like internationally. So I think every regulators will take more look at those applications than small exchange. I think that's the first thing. Second thing, I think Binance International still stands in a very big market share. As far as I know, right now Binance still has more than 50% of the market share. And I also trade there all the time. So I think right now, it seems to me Binance.com is intact.
Well, why are you trading on Binance when you have Huobi?
I doing arbitrage trade on Binance and Huobi, different exchange, but mainly Binance and Huobi. Yes.
Are you saying Huobi has inefficient pricing? Or are you saying Binance does? Who has the more inefficient pricing?
I think current still Binance. I think Huobi is around 70% of the market trading volume and also index book.
You've been very supportive of Binance and CZ amongst the SEC's crackdown on Binance, and like Lawrence mentioned, we've seen other regulators kind of crack down on the exchange. We've seen the C-suite leave. Do you think that will hurt Binance's case should they want to apply for a license in Hong Kong?
I believe that Binance eventually will apply license in Hong Kong because these are very big markets. I think Binance always wants to play a very big role in Asia markets as well. We have seen Binance acquire a Korean exchange to operate license in Korean, and also Binance also recently operate exchange in Japan. So that's why I believe Binance will eventually operate in Hong Kong. But I think right now Hong Kong is not the priority for Binance. I think the Binance right now the priority is still to sort it out like everything in United States. Hopefully, eventually, I hope both Coinbase, Binance can reach agreement with U.S. regulators eventually, because it's gonna be beneficial, I think, for both regulators and the crypto world.
So, Justin, I imagine you're probably not primarily worried about Coinbase and Binance in the United States, because the SEC has also charged you and your companies with fraud and other securities law violations. So I'd imagine that's a bigger concern for you, understandably. So let's just talk about that for a second. I mean, what do you think is going to happen here? I imagine that, you basically have to avoid the U.S. market now for at least some time. Does that matter? Is that affecting your business? What do you think is going to be the outcome of these SEC charges? Because they're pretty serious.
Sure. So first of all, I think after Binance and Coinbase get charged by SEC, we become the small potato, and nobody even notice anymore, right? So, but of course, I think we respect SEC, and we hopefully eventually we can reach some of the agreements with them eventually. But right now, of course, I think after U.S. regulators start to crack down crypto in United States, recently we have spent most of our time in Hong Kong to build a crypto world in Hong Kong.
mean, but are you worried about this at all? Like, I know maybe it's small potatoes compared to Coinbase and Binance, but like, being charged with fraud and securities law violation, like that's still like not great, So I mean, is this a concern for you at all?
I'm kind of optimistic. Eventually, I think we can reach agreement with regulators.
Justin, have you spoken to CZ lately?
Yes, we speak all the time.
And so how's he doing, given that the C-suite has left, like Lawrence mentioned earlier, that he's being sued by all these regulators? How's he holding up?
I think first of all, employees left companies, come and goes. It's normal, right? So
all at once?
So first of all, I think it's not like I don't think it's like everyone leave at once, right? So I think it's few employees left Binance. So that's the first take. I think at least the people who talk to me all still stay with Binance. And also, Binance is a team more than 8,000 employees these days. So I wouldn't surprise, right? So if you have dozens of people left at once. So that's first of all, that's my take. Second, I think I also believe exchange, we need to look at their business, like market share, like trading volume. I think Binance currently still is in a very healthy status.
Justin, real quick, I just want to tie this all up here. So we've been talking about these like SEC charges, and I think the larger point here is that you're just still out there doing your thing in Asia. CZ's out there doing his thing all over the world. Does the U.S. crypto market still really matter at this point?
I think, of course, U.S. crypto market still matters. I think in terms of like crypto price, and also for everyone, right? It's still like one of the center of crypto. But right now, it's just like turns out for everyone, right? Even including Coinbase, the ROI in United States is very bad, right? So even Coinbase, I think, started to move their investment to Dubai, like, and in Middle East and Asia. So that's why I think I even see the news says like Coinbase started to contact like Hong Kong regulators to explore the possibility if they can operate there. So that's why I think for the next probably 1 or 2 years, the major narrative in crypto space is Web3 in Hong Kong.
All right. And Justin, earlier this month, the first real world asset product, staked USDT, launched on the TRON blockchain. Can you tell us a little bit more about that and what people can expect? Yes,
sure. So STUSDT is a product learned from STETH. So compare similar to Lido. So basically everyone can stake their stablecoin. Currently only supports USDT, but in the future I think USDC, TUSD, USDD and major stablecoin will be supported as well. So basically you can stake your stablecoin there and earn an interest around like 4 to 5%. And you can withdraw and unstake your stablecoin at any time. So basically, it's just like stake ETH product. It's involved, stable yield and good liquidity and the tokenized stablecoin, yield stablecoin. So that's why I think it's a very good product. So if you want to use them, you can just go to stusdt.io and stake your stablecoin. And if you want to withdraw them, you can withdraw them like instantly.
Justin, thank you very much for joining the show this morning.
Thank you.
That was TRON founder and Huobi global advisor, Justin Sun. We're going to take a quick break. And when we come back, we're going to check the crypto markets as Bitcoin remains over $30,000. We'll see you in a bit.
Bitcoin is staying steady at just over $30,000 per coin. Joining us now to discuss the crypto markets is GSR Markets co-founder and president, Rich Rosenblum. Welcome back, Rich.
Thank you. How's everybody doing?
It's Tuesday. That's how it goes. You point to a Bank of America global research report showing big inflows into tech more generally in May. We're now in July, of course. Why does that matter to crypto?
Well, I'd also note it was not only the biggest inflows in 2 years, but also the biggest weekly inflow ever for tech. So it shows there's been some improvement in sentiment for risk assets more broadly. But I think that's more of just the general picture that investors are coming back in. I think after that, we had the June bank stress test come out and showed that the biggest 23 U.S. banks came out of the stress test just fine. So I think that sent the signal to BlackRock that it was okay for them to put in their ETF application for Bitcoin. I don't think that's a coincidence there. So I think that we're really seeing a sea change in crypto where institutional investors, after really shying away from the space since the FTX debacle, I think these are the signs that they're clearly on their way back in.
So, along those lines, something benefiting from the application by BlackRock was, of course, Grayscale's GBTC, which, and for all the folks at home who might not know this, but Grayscale is owned by the same company that owns CoinDesk, that's DCG. So anyway, we had this, they have 19 billion in this Bitcoin trust. There was a massive discount. What were we, close to like 50%? It was like ridiculously low. All of a sudden, since this application, the discount for the trust to the price of to the Bitcoin it holds shrunk to 20-something%. Is that justified? Do you think that eventually, if and this is a big if, right? Because we can't guarantee it. BlackRock gets its ETF passed, that GBTC has a chance.
I think there's definitely a chance. I think that they are very well connected, very experienced company. I don't think they're known for missing their ETF applications, but I think it's more of a sign that the investors are returning in general. And this level is very depressed because there's just emergency exits from groups like Three Arrows that are getting out of their position at absolutely silly levels. So I think it's more about the reversion to the mean. It's still a cheap level rather than that minus 20% implying a strong probability that the ETF will get approved. Probably will push into next year, but I think this is more showing that there's a surge of just investment in the space in general, since these is still one of the tools that investors will use when they enter crypto. And after these last few weeks, now we have net inflows for the year for crypto into these types of investment products. Prior to the last few weeks, it was a net outflow.
I mean, the timing's a little bit funny just because like the SEC is kind of going after all these, crypto companies. And it's sort of a weird time in my opinion, for institutional investors to be like, yeah, let's jump right into the market. But anyway, I guess my question is quite simple. Are we in crypto winter or not? Like, which one is it? Because I feel like there's not even a consensus on this at this point.
Markets always look really bullish on the highs, so gotta temper the view when we're close to the cycle high here with Bitcoin back above 30,000. But I am feeling pretty bullish, and I do think that, as I mentioned, it's a real sea change that Larry Fink has come out in support of the space and submitted this application. And I don't think that's a coincidence or something funny. I think it's all very well coordinated. There's been a drastic change from Q1 to Q3 of this year. We went from banking crisis to the stress test getting approved to not only BlackRock, but a handful of ETF underwriters sending in their applications. And so it might be that, behind the scenes, the SEC is changing their tune, and they're thinking, well, BTC and ETH, we can't hold it back anymore. They also approved last month a 2 times levered ETF. So I think things are changing, and even if there's still some hot water for the alts, 75% of the market is Bitcoin and ETH, and investors coming in to buy those two assets, it's going to flow to alts eventually. So I am feeling pretty bullish. I think we're maybe not out of the bear market yet because we haven't seen private investment come into early stage deals, but I think it's coming.
You also took a closer look at CME's Bitcoin futures open interest. Can you unpack that for us?
Yeah, it all fits in with the other pieces of information, and that with futures markets, if open interest expands, it's showing that there's more people with open positions. So if there was that big move and the market rallied above 30,000 the first time in a few months, and open interest contracted, that would be showing that was shorts coming out of the market, and it was more of a short covering rally, probably something you'd more want to fade. But the fact that open interest expanded is showing that that's new buyers coming into the market, and that connects with the fact that we're also seeing inflow into these investment products.
Rich, thank you very much for joining us this Tuesday morning.
Thank you.
That was GSR Markets co-founder and president Rich Rosenblum. We're going to take a quick break, and when we come back, we'll take a sneak peek at the European Union's Metaverse strategy right after this.
The European Commission's Metaverse strategy is slated to drop later today. Joining us now to discuss is the editor of Brussels-based website and research initiative Metaverse EU, Patrick Grady. Welcome, Patrick. So, what is the European Commission's Metaverse strategy? Why does the European Commission need a Metaverse strategy? What does it say? What's the TLDR?
Well, thank you for having me, and it's a great question because we're still trying to figure that out, to be honest with you. I'm not sure at the moment the EU quite knows itself, but that's not really the purpose of these initial communications. At the moment, it's just about creating a conversation. So what we're going to expect from this document when it does come out is some very vague and fluffy language, I think.
Okay, that sounds promising. But I guess putting aside the strategy for a moment, what is kind of the EU's approach towards the metaverse in general? Is there anything like specific about it, or is it again just something that that the EU is still trying to figure out?
Well, what we see, which might be interesting for your audience, is there's a huge divergence of terminology here. I mean, a lot of the rest of the world, you see Japan, Korea, and Finland launching metaverse strategies, as you say, but the European Commission and the EU institutions, they want to diverge a little bit here, and so they're introducing this new terminology, and what you're going to see is really a Web 4.0 strategy. So, I mean, as I said before, we're still trying to work out exactly what that means, but the divergence is probably what's going to be unique about it.
4.0. We're not even into 3.0 yet. So what's this thing about European values? Why does it, how does it differ from other values out there? I noticed that there's something about wanting to encourage or maintain European values. Does that mean like, I don't know, selling weed in Amsterdam and stuff like that? What exactly are they trying to do here?
Well, you're going to meet some cynics, I'm sure, who will tell you that this call for European values is a bit of a dog whistle, really, for protectionist politics, and mainly so we don't sort of create an internet here in Europe that's governed really by non-European companies. But on the other hand, I think that's a bit of a cheap slander, really. I mean, European values means that you build things slowly, and if it means that you're not the first person to build a market-dominating headset, well then here in Europe, we're okay with that as long as we ensure that we do fairly balance the risks and the rewards.
You mentioned other jurisdictions creating metaverse strategies of their own. I think like a year and a half ago, Barbados said they were launching an embassy in the metaverse. Do you envision a metaverse with borders, which kind of feels like the antithesis of the metaverse as we speak about it?
Yeah, no, this was sort of my big fear, really, with this strategy. I was worried, and a lot of Europeans were worried, that we were going to build a European metaverse that didn't work with other companies or other countries.
Minitel.
Precisely. But what we're actually hearing with this strategy is that the EU will be open to engaging with international experts and companies. So that's actually quite positive. That's something I'm not as worried about. I think, I'm more worried about this confusing terminology at the moment.
Well, give some difference, when you say confusing terminology, can you give some examples here? What are you talking about?
It's as I said before, I think we're kind of, the word itself, metaverse, is already a bit confusing, and I think there's a hesitation amongst regulators to use a word that one company in particular has also endorsed quite heavily. But truth be told, people in the field, this word has a bit of history, and now governments are starting to endorse it too. So I think it kind of makes sense to stay on the same page here. But this is not happening. You won't see the word metaverse more than once or twice in the text, which is going to sound quite absurd, because that's what it's going to look like to the rest of the world, a metaverse initiative.
What are they calling it?
They're calling it Web 4.
Web 4. So they've already skipped. Okay, so that explains they skipped Web 3. They went to Web 4, and that's basically metaverse. So what's Web 3? Is that like I don't understand what they're calling that then.
To me, it sounds like there's been a conflation with this fourth industrial revolution. So that we're in the society 4.0 or something like this.
Oh God!
But look, you try and find literature justifying this terminology, and you won't be able to. Try and find papers about the metaverse, and there are papers that have done meta studies of 160 definitions. So it's kind of a bit absurd for this divergence. And I promise you that that is the feeling inside here in Brussels.
Yeah, it's European values indeed.
All right, we've talked about Metaverse, we've talked about Web4, so it just makes sense that we ask about AI. Any mention of AI here?
Well, no, but that is quite deliberate because at the moment we're in the key negotiation phase for the European Artificial Intelligence Act. So, yeah, they do not want to sort of have a stance that would contradict what's going on right now. So you're going to have to stay posted. I think by the end of the year, you're going to have a final answer on AI.
Web 5.
Web 5. I think
Jack Dorsey's already taken us to Web 5.
I mean, one thing that might be interesting as well is we were expecting it's the European Union there to be some sort of big regulatory hammer, and that's also not kind of the noise that's going to come out of this strategy. At the moment, the feeling is that the regulations, even the crypto MiCA, which I'm sure the audience are familiar with, it's sort of seen as okay for now. There's a wait and see feel to this strategy, I think.
All right, Patrick, we're going to have to leave it there. Thanks so much for joining the show today.
Thank you for having me.
That was Metaverse EU editor Patrick Grady. That's it for First Mover today. Lawrence, Emily, thank you so much for joining me. We will see you both tomorrow. We return at 9 a.m. Eastern Time. You're watching CoinDesk TV.